Hello everyone, welcome to the BISP Solutions. So our today's topic for the ticket is how annualize and deannualize logic will work in tax automation in TRCS. So as you know, we have several logics to be applied in tax automation. So how that logics will work, we have seen the output logic and movement logic. Now we'll see how our annualize and deannualize logic will work and give us the result. So before that, and you know that we apply all those logics in the configuration card at the backend, and then it gives result that it fetches the result. It fetches the data from the financial statement to our current provision form with the help of that logics that we define in the configuration form. Now before that, I would like to show you in configuration card. We have this tax automation form, and here we apply all the logics to fetch the data from the financial statement, whether it is balance sheet or P&L, to the current provision form. So you can see this in meals and entertainment. I have already used the logic as annualize. Percentage I have defined as 100%. Source account is my meals and entertainment, and target account, a target movement is the automated. So before that, I would like to make you understand what is this, what is annualize and deannualize logic. So annualize logic is, okay, so you can see here, uh, trial balance. We'll take one scenario like trial balance has been loaded in P3, and meals and entertainment expenses for that 3 months ending 31st March is $36,000. To analyze to a full year of or 12-month estimate how that will be done. So you can see 36,000 is the amount for your P3 because the trial balance has been loaded for the P3 month. So 36,000 needs to be converted to a monthly amount, that is 36,000 divided by 3, it will become 12,000, and then it will be converted to a full 12 months amount. So that means if you see, we have loaded for P3 36,000. Now to analyze that amount, what it will be done. So this is our financial statement. In our financial statements, the amount in P3 period is this. Now to bring the data to P3 period, but I want to annualize, I want to see what will be the annualized amount. That means a 12-month amount. So you have to estimate that. So for that, first you will calculate it for what will be the period 1 amount if this is period 3. So it will be 36,000 divided by 3, it will become 12,000, and then P12 will become, so this is for 1 month. Now into 12 will become 1,44,000 for P12. So this you will, it will capture in your current provision form. So in current provision, according to the, this is followed as per the tax law, this is followed as per the company law. So there they said we have loaded 36,000, and they might have, you know, some expenses are there, so they might have that debited 36,000, but to analyze it, it says this is a logic like annually we won't, income tax would allow you to charge that expense. So how to analyze that expense? So this is the amount that you will see in your expense side. This is the annualize. Now deannualize is like Suppose you have in P12 50,000, or you can say 60,000. Now in P1 you are in P12 period. Now you want to see for the P1, so it will be 60,000 divided by 12. That means 5,000 for every month. This will be the amount for P1. So you can see this is the P6 amount, this is the P1. So in P6, if it is 108069, what will be the amount in P where in current provision form? So this, you can see this divided by 6 will become the P1, and into 12, this amount multiplied by 12 will become the 12-month period. Now for de-annualize, if this is the amount that we are getting in the P10 period, what you will get in the P1. So you can see this divided by, even if you are getting in P12 or even in P10, you want to do de-annualize it. So divided by 12, so you'll get in P10, P1, and now that this amount stands for the period 1 multiplied by 10. So this is a simple mathematics. So I'll show you for meals. So this is my meals account, and annualized logic I have used here. Percentage is 100%. It's up to you how much you want to pull it from the source. So my source account is meals. I want to pull from meals 100% to this target account, that is meals, and target movement is automated. So for meals I am using the annualize. For entertainment I am using the de-annualize logic. So first we'll see, focus on the annualize logic. Now I'll show you. So here I'll open one side the financial statement, another side I'll open the current provision. So meals is an expense, so I'll open income statement by source. If we check here, we have applied the logic for P10 period or for P6, whatever it is. So I will go to the mails, or you can search from here. This is the mail amount, that is 168304. Now if we open our current provision form, so you have 201964 in your P10, and you have 168304 in your P10, which is coming from your financial statement. So here analyze logic we have applied in P6 period. So in P6th period, you can see the meals amount as 108069. So in P6 you have meals as 108069, and in current provision, if you check in the P6, if you check here in the P6 period under permanent differences, you can see the meals and entertainment total. So the meal is coming to be 216137. So how this is being calculated? So you can see in P6th period, your income statement amount shows 108069 versus income tax allows this provision to be carried forwarded to. So in PC, first we will calculate as per P1. So P1 will show you this amount divided by 6 will become P1, and in P6 now this, so we are now trying to annualize it. So this amount multiplied by 12. So 216138 is the annualized amount. We can see 216138 is the annualized amount for the P6. So if we are still in the P6 period and you want to see what will be the amount in the at the year end, that is at the P12, how you calculate this. So we have seen this is the way how you do the you apply the annualized logic. Okay, so this is the example. So I'll repeat it. This is for my, this is coming from my income statement. P1 is we divided because it is we are loading the P6 period, and at that point of time we want the data to be shown to be we want analyze logic to be put. We do not want the same financial statement amount to be bring into the current provision. So we divided it by 6, and we find out the figure for the P1, and then for P6 it is annualized logic. So this is P1 multiplied by 12, that is it annual, as a 12-month amount will be 216138. Similarly, now we will see for deannualize. So for deannualize, we'll again go to the configuration under tax automation. Now I am saying I have the P10, that is the trial balance loaded for the period P10. So I'll just change the account to when I'm applying the analyze logic, it is easy to understand. So I'll choose or pick the entertainment account. You can see here I've applied the logic as deanalyze. Percentage used is 100%. Source account from where we want to fetch the data is entertainment account, and my target account is also the entertainment. Target movement is automated, so we want the result to be seen in the automated column. Okay, so this is for P10. Now we'll open our current provision. Before that, I would like to show you the entertainment amount for NP10. So you can see 168304, it is coming in the P10. So I'm so sorry. This is that was the meals amount. Entertainment amount is 120868. That is 120868. So how will you calculate it? Now in P10 we have 120868. So we'll annualize it. So sorry, de-annualize it. So for P1 we'll calculate this divided by 12, and then for P10 this will be multiplied by 10, because this is a forced period 1 amount, and when it will be multiplied by 10, you will get 1,00723. So when you were using the annualize, you saw this is the amount, and we derive this was the 6-month period. So anyway you want to come to the P1 in both the cases, so divide by 6 will give you the P1, and then now you are annualizing it, so multiply it by 12. But in G-analyze, this is the amount for P10, so you have to divide it by now 12, because for annualizing you are multiplying by 12. For de-annualizing for P1 you have to divide it by 12, and then you want to calculate it for P10, because this was the original amount when it was loaded. So we are seeing P6 in annualize, and de-annualize we are seeing the P10 period. So anyways, uh, we want the data, the final amount by using the de-annualize logic in P10 period only. So you can see 1,00723, that is after P1 multiplied by 10, and here you are not multiplying it by 6 because you are annualizing it. So multiplied by 12, and here divide by 12. So now we'll see whether we are getting this amount or not in our current provision form. Yes, so this is entertainment, this is P10, and you can see 1,00723 is the final amount, and here it is 1,072.33, which is a round off of sorry, this one 1,00723. So this is how, with the help of annualize logic and de-annualize logic, you you fetch the data from the financial statement to your current provision in the required target account. So that's all for today. If you have any questions, please contact BISP Solutions.